Yes, guys, come on. So we're finally on to the last video of the third part of the technical course, and this is the optimum trade entry, the third type that I look at. So what we've got right here is, honestly, it's the inducement. So we've already gone through this in one of the previous lessons, but I wanted to actually explore it a bit further because usually what I explored there was during the lower time frames. But again, this type of concept can be explained further on the higher time frame. So what do we have? We've got a massive order block that happens, and usually, take note, inducements occur when the order block is a very, very big, has a very, very big body. Now, there's not many usual times where you see big bodies like this. And of course, when we see that, that's when we like to actually refine our entries. And that's when we find our smaller entries at the top, for example, and that's where we would enter. Now, what would happen here is price goes down from there. We know we're in a downtrend again because of our technical confirmations and fundamental confirmations. You got sell side liquidity at the bottom, and then a significant order block created over here. Now, what price does is it goes straight there, straight into the order block, perhaps on the open or just on the wick of the order block. Then that creates buy side liquidity on the lower time frame over here. Now, how do I understand when an inducement might happen? The way to know is the reaction from the next order block that you might see. And as soon as you start to see this reaction right here, boom, and it rejects off, that's when you know you might be starting to see an inducement. Another confirmation, in reference back to the massive order block, if you've seen that it just reacted off right at the bottom and there's still a lot inside the order block that needs to be mitigated, because you've got to understand this massive order block consists of this. One order block there, returns. This is unmitigated. Maybe perhaps a smaller order block. You've got a liquidity void in between. And then what price did here was it reacted off the bottom one. But you've still got this major order block that's been unmitigated. Unmitigated right here. And that is exactly where you would enter on the inducement. So price goes back up, reacts to this, goes up, enters on the lower time frame, refine that candle, and you'll see that inducement. And then price goes straight back down to take this sell side liquidity. Or in a certain type of scenario, it could be equal bottoms, which is even more confirmation for us. So yeah, let's get into an example. So for this example, we're looking for sells, right? So what has happened with price is we've reacted of a higher time frame point of interest. This could be a 4-hour block, for example, and it usually is a 4-hour block for me. So we reacted straight off, had some slight consolidation over there on the lower time frame. We broke down past this, boom, came. This was the first entry, came back down. Then that was the inducement on that lower time frame entry. Then, as price kept on going down, again we reacted off. So we had this clean order block that was open and unmitigated, and that's exactly what we were looking for. So we've got to be patient with it. Price goes from here, goes all the way down, does not break past this low right here. And that's fine for us because we've broken a bunch of structure over here. So we know that we're still looking for sells. Plus we've reacted off this 4-hour. And that's the key thing to understand. If you react off some kind of 4-hour or a larger time frame point of interest, that's when you know you're going to be going down. So we go there, create this liquidity right here at the bottom. And then what can we expect? Some kind of pullback, right? So price pulls back, goes straight to this open of the order block, midway through as well. So you'd think, okay, that's a perfect area. And this is what happens. Price goes straight down. It creates equal highs at the top on the lower time frame. So what this would look like is this. And you still got that. To me, that's one of the essential points that I would have to see, because even this entry from here is a very nice entry. Stop loss right there, entry there, TP right at the bottom. That's looking like a juicy 1 to 6 or a 1 to 7. So when I saw that equal high happen, I knew that as we're going down, yes, we're going to break that structure right there. But when we get to some point of interest right here, and in fact, it was an area over here, it was a 5-minute order block, which I would not even enter a buy on. It's a weak order block at that point, not even in discounted areas. So please don't do any of that. Price would come back up straight, induce the stop losses that happened there, because what do people do when they've entered right there? People are going to understand, okay, now we're safe, we've broken past this low, now we can put our stop losses right there, and that's exactly what we hunt. That's what we come and take. Still within this range, because if we go any higher than this range, then the trade is no longer valid. And that's what we get. Tick goes straight down, obviously consolidate for a while, but price eventually comes to take and wipe out this liquidity and go on the downtrend. So anyways, guys, I hope I've really cleared up on everything that we've learned in the past 3 sections. Obviously, everything, please take note. Everything counts. I mean, everything that I'm teaching right now is all the relevant pieces of information that I've acquired over, my whole history of trading. And the optimum trade entries are the setups that I always look for. The win rate on these is much higher than if you were just to enter on any random order block for any reason, right? Because what I realized with a lot of smart money traders is they would identify perfect points of interest. They say, okay, if we get there, we'll react and then we'll see if we enter. However, they don't have a strict strategy that they actually look at. And for me, this is it. These are the 3 main types that I look for. Obviously, remember that these are our requirements: liquidity, market structure, time of day and week, and then fundamentals as well. And this is, of course, what we're going to be getting into in the next part of the course. So anyways, guys, I hope you enjoyed this lesson. If you've got any questions about the setups and would love to go through this more, I can set up, obviously, calls to go through everything. But yeah, I hope it all made sense. Actually draw these diagrams into your notebook and then keep them with you whenever you're trading, so you understand what to look for on a weekly analysis and then even on the lower time frames as well. Right, guys, take care, and I'll see you in the next part of the course.